Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the cryptocurrencies. So you probably heard about the overall stuff that stands around the cryptocurrencies right now. That Securities and Exchange Commission has taken really big efforts starting, some spinning up the regulation process using the lawsuits and so on. And actually this is not surprising to us because we have talked about this 2 months ago when we have prepared fundamental monthly report for Bitcoin that we have called as a regulation. Yes, this is a very boring topic to read. It's not as inspiring and fascinating as some conspiracy theory or some really bright trading setups, but this is the part of the market and it's really big part because regulation could trigger the action on the market of the scale that maybe could be triggered by really big political or economical events. So, and from that standpoint, we should treat these driving factors seriously. We should not ignore it and just thinking that it's all about the banking risk management. It makes sense only some compliance or something of that sort. Absolutely not. You could see what's going on. So, additionally, we could say that probably we stand right now at some initial stage of this process, because under the headline of some regulation and that safety of the investors, as it's proclaimed by the Securities and Exchange Commission, I suspect that behind of this stand really some strategy of the financial authorities of the United States, Fed Reserve, United States Treasury, Securities and Exchange Commission is to take under control of the finances in the country and to redistribute the cash that right now is holding inside of the cryptocurrencies, just to scare people and force them to take money out and send them in the United States Treasuries in the bond market. So we have warned about this even the half year ago when we said that will be a really big fight for liquidity, and that's why in this year and in last year we said that we do not see really good background for significant rally in the Bitcoin market. And that we see right now. So currently the chances and risks of the deep downside action here significantly increases. So if you have read our recent report on the Forex market, on the gold market, we have explained that some cash right now that might be redistributed is 7 times less than actually United States authorities would like to get. So yes, the capitalization of the cryptocurrency will take together Bitcoin, Ethereum, Tether, so it will be, around 1 trillion together. It's not really big amounts, but still something. And of course, not the all sum will be redistributed, but it's still some efforts could be made to just grow at least the half, so why not? So speaking on the technical side, what we have, the new bearish signs are appearing gradually. So we have warned to not rely on recent rally and be wary of the possible processes that now is going on. And take a look what we have on this recent week. Market has taken out the lows of the reversal bar. So the reversal background, reversal potential, bullish reversal of course, has been erased. So we do not need more this sign since reversal bar. And take a look, market actually creating the new lows. So it means that this tendency is still valid. And now we are returning back to our major topic here on the weekly chart, vital Bitcoin area 2350, 2450. So this is the touching of this level and testing of this level seems right now, mostly unavoidable. And we're coming to the big test in the history of the Bitcoin. So because ability of the holding there gives market the chance to restart our protection. Breaking it down leads market to this important target, around 1220 area. So it's really big bets right now on the table. So we'll see what will happen. Now we're turning to the daily chart. So here last time when we talked about this, we already paid some attention to performance around the OP target. And we said that it is not a good sign that market is retesting it 3 times. So it was first test, second attempt to go higher, failed, market dropped. Yes, it has formed some kind of the engulfing and it's really good performance, but inability of the market to start upward action right from the strong support. This is not just the OP, there's also fib levels around it. So just bring them in the chart. So you could see what's happening here. This was around the nearest fib level. For normal bullish market, it's more than enough support to reestablish upward action, but it hasn't happened. Even more, take a look what has happened last time. We discussed short-term bullish context and we said, yet theoretically it is possible to consider it, although we are really skeptical on the ability of the market to start upward rally right now, but technically it is possible to consider this setup for short-term. At least market could show some ABCD, maybe pattern or something of that sort. But grabber already was standing in place here on the daily chart. So if you plot the MACD predictor, you will see that we have the grabber. Grabber suggests taking out of these lows, and this hasn't happened yet. And now let's take a look what happened with the engulfing. So market mostly totally erased this reaction, which is also tells you that market is really heavy and bulls have a lack of the power to push price higher. Yes, we do know that this external driving factor, but who said that this factor stopped working and not valid anymore? So that just confirms our view. We still think that it's chances for more downside continuation. And on the daily chart, we start thinking about the 2350 target, so XOP, and take a look. It stands near the support area, 2324 area right there. So also we have the 25, the fib level. So also has not been tested yet. Beyond the XOP, we also have some intraday targets. So here's, if you remember, the hand and shoulders that we discussed, and we was saying that keep an eye on this area. This is vital points because here we also having these grabbers. Market was trying to just jump out from it, but failed and collapsed. Now it's some kind of the flag consolidation. Mostly reminds me some consolidation before a breakout because trend stands bullish. By the MACD you could see, but price action is not. It mostly stands flat. And it's right now looks more bearish rather than bullish. Here you could recognize the kind of the butterfly shape. And using extension of this mouse rising swing, you could get 2 additional targets, intermediate targets, 2480, which is very close to this level, 25 support. It's first target. Next one will be around 24 even. It's 1618 extension. So that's the target that also could be considered right now. On the hourly chart, I do not see something really interesting. That's the hand shoulders pattern that we have discussed last time. In general, particularly this pattern has worked nice because its minimum target of the ABCD has been completed. So this was relatively safe. Any attempt to take the long position here because it was a lot of time to move stops to the break even. But in general, speaking strategically, this overall setup and ability of the market trying to just jump up from here has failed. So this collapsed down. So this is definitely signs of weakness. So currently we do not consider any new long position. Speaking on a short position, you stand inside the flag pattern, and probably you could use some downside continuation pattern, some kinds of the garter steeple to sell, some other patterns for attempt to go short. But be aware of the lots of events on this week. So tomorrow we'll get the CPI numbers, then the Fed meeting, European Central Bank meeting, PPI numbers, a lot of statistics in Europe. So it might be really a bumpy ride in this week. But in general, we could say that market looks weak, and you could consider this some minor fib levels for possible position taking. 30% retracement here fib level, but I suspect that hardly market will go out of this consolidation before the collapse. It's most probable the downward action should start from this flag. So that's our view on the Bitcoin market. Let's keep watching, and especially keep an eye on what's going on with all these lawsuits against the main exchanges.